He traveled the world for a dozen years, helping some of the biggest names on Wall Street make money. But after the GFC, he took the plunge and went to work on his own, helping real estate investors and small business owners protect their hard-earned income. Today, on Stories Behind the Door podcast, the founder and president of South Jersey Tax Services, Matt McDermott. Well, as business owners, we spend our careers trying to make more money. But today we're going to spend a couple minutes talking about how to keep more of what we make. Today's guest spent a early career on Wall Street, working for some of the most recognizable financial institutions in the country. Today, he is an accountant helping investors, real estate investors, business owners, entrepreneurs protect their finances. Really excited to welcome my personal accountant and tax person, Matt McDermott, to the show, South Jersey Tax Services. Before I jump in with Matt, we got a lot of fun stuff to talk about. I want to give a quick shout out to my friends at Kiwi 2, Wayne Woolsey and his team, 30 plus years of ground up development, providing steel, the best crews in the business. Visit them at kiwisteel.com. Early in your project, the earlier you reach out to them, the more they can help you save time and energy with their 30 plus years of experience. Well, as I mentioned, Matt, God, I can't get the words out of my mouth today. Matt McDermott, my accountant, takes care of my taxes for me, something he's been doing now for more than a decade. Obviously, you've helped me in such a significant way. I was in your office a couple months ago having a conversation and kind of touched on some subjects that you're super familiar with that I'm excited to get into with you. Before I do that, I always start this podcast the same way, which is, how did you find yourself being an accountant doing people's taxes? What was the journey that led you to that place?
That's so interesting, Thaddeus, because it all started at Rutgers. I was in the School of Business accounting program over there, and all the time I swore, I'm not going to be a CPA. I'm just going to ride this thing out, take the accounting approach, kind of the most versatile major I can have, just to go out there and find a job somewhere. And I was bartending at the shore all summer long. I thought that could be my future, in the bar restaurant world. And then knock on the door. Deloitte and Touche came looking for me my junior year, wanted to offer me an internship, which was great. It was like a 6-week internship over the summer. Then they flew me out to Arizona. And at the end of the internship, they offered me a full-time job for after I graduated. So I'm going into my senior year already working for, at the time, one of the big 6 accounting firms. So I had it all lined up. So, I go work for them. I was on some great clients out there, some really good, challenging. In fact, one of the clients was Rite, who was like the Enron before Enron, as we called it. Did a lot of real estate work on that audit. And then, things just started moving, and they said, hey, we want to keep you around here, but if you're going to stay with us and you're going to be a manager, you got to pass that CPA exam. So lo and behold, I took it, I passed it. Fast forward now, almost 30 years. And here I am owning my own tax accounting firm, doing a lot of tax resolution, tax strategy, tax planning. But yeah, it all started at Rutgers.
I love that. No big deal. You get out of Rutgers and you already have a job in hand from one of the big 6 accounting firms. Not a terrible way to finish. It's a little different than my journey of getting out of college. I graduated just a couple years before you, but very interesting time, right? This is the late 90s, kind of applicable to today. You and I kind of lived through the web boom, right? The dot-com boom then. And wasn't like when you're graduating from Rutgers in 1998, wasn't the greatest economy to roll into as the kind of the dot-com crash sort of started to happen. And talk to me about how cool it was to have that job lined up, and then take me through the steps, because you spent quite a bit of time working in New York City in your career.
I did. I actually, so I was there before 9/11. So that was working in Two World Trade. And Deloitte
You
was
actually worked in Two World Trade.
I did, yes. And Deloitte was such a dynamic company with so many industries that we serviced. So I actually just, for whatever reason, whatever luck it be, I was kind of led into the real estate side. So I was doing a lot of lease consulting. I was doing some work on the back end, kind of really understanding how these companies are accounting for their leases, right? And then, like I said, as this Rite kind of thing started materializing. So Rite went through a phase where their auditors actually withdrew from their engagement because they could not put any confidence in the financial statements. So they hired Arthur Andersen, Deloitte and Touche, and we went out there. About 150 of us went out to Camp Hill, Pennsylvania, for almost a year to restate 5 years of financial statements. Right. So I'm sitting there and I'm thinking, okay, I'm probably at the time 22 years old, looking at these leases, and Rite Aid had gone through this big expansion process where they were opening pharmacies and pharmacies and pharmacies. And you kind of look at them and say, are they really a pharmacy in the pharmacy industry, or are they in the real estate development industry? And we kind of looked at it from that perspective, saying, no, they're really out there developing, buying up properties. They were going through transactions at the time are called sale-leaseback transactions. So they're basically building the property, selling it off, leasing it back. The accounting for it, though, was off. So, as I'm sitting there and doing my work, meeting with a partner over at Arthur Andersen, one of the competitors, but still on the job, I said, hey, do you have any guidance around these sale leaseback transactions that I can use? Because our firm didn't seem to really have anything trued up to those. So he hands me a book. I'm reading the book, going through, and all of a sudden, bam, it clicks. I said, look at this. I said, this company's developed probably in the last year about 200 real estate transactions that were sale leaseback transactions that basically had terms in these leases that were almost set up like a financing. So while on their P&L, they were reporting these as operating leases, in other words, expensing their rent, they were setting terms in these leases that were exceeding 100 years. And in that regard, you look at it and say, that's really a financing. That's not necessarily an operating lease structure. So, I pushed to our partners. I said, I think we have something here. We may have to restate how they're accounting for their leases. And that just blew up the whole department, because it's saying, wow, if we have to put these leases on our balance sheet, now we have to show all this debt. And all that debt was going to trip all their debt covenants, which was basically going to put them in a far worse position than what we already knew they were having. Well,
Yeah.
given about 10 days later, fast forward, we're restating $1 billion on their financials. Yeah. So this article actually made it into the Wall Street Journal. I didn't get my name tied to it, but I was
Yeah.
the guy that basically pushed that one up the chain. So Deloitte came through and said, we'd like you to go to our national office and help us with some of the documentation around how we are auditing sale leaseback transactions. And said, I was a little hesitant to do that. But I helped out kind of remotely with some of that work. And then they sent me down to Fort Belvoir, Virginia, to do some work for the Department of Defense. So I had some clearance with there, and I was looking at how our country accounts for its fuel. So I was doing kind of trying to figure out what's the inventory for how our country accounts for our oil and gas and fuel supply, when a lot of this is top secret information, right? War reserves and what have you. So I enjoyed that for about a year. And then, I guess it was probably my 5th year with Deloitte. Merrill Lynch had an opportunity, and I had worked with some folks in the Merrill Lynch audit department when they were at Deloitte. So they recruited me over to Merrill Lynch. So see, now I'm in the finance side, right? So there wasn't a whole lot of real estate I could offer to Merrill Lynch. But there was, I was in the mutual fund piece of that, doing some internal audit work with them, and it was great. And then Merrill Lynch said, hey, we have an opportunity for you in Tokyo, Japan. I said, great. So now I would be in an elevated role in Tokyo. So yeah, packed my bags. I went to Tokyo, and while in Tokyo, BlackRock comes along and buys the mutual fund business of Merrill Lynch. It was called Milim at the time. So I'm hanging out there in Tokyo, getting acquired by BlackRock, right? So, and as we know at that time, BlackRock only had about 16 billion in assets under management. So they were just in that acquisition phase, trying to grow
Yeah.
what they had. So yeah, fast forward from there, I ended up coming back to the US, then went to London for a little bit, did some time in Sydney, Australia with BlackRock, and it was just outstanding. And I remember coming back to the US after doing these tours in these other countries, and having a conversation with my boss, and he says, we have an opportunity for you in Hong Kong. I was like, well, that's great. I said, but I really don't feel like I'm getting the opportunities in the United States like I really want.
Yeah.
So hung in there for a little bit. We, did a lot of cleanup work, a lot of work with really still integrating what the BlackRock systems with the Merrill Lynch systems through the merger. But they moved on and said, I think I just want to take some time away and see if I can build my own business, around tax and advisory.
I'm fascinated by this. I mean, this is like, very few people in the world get to experience that kind of a whirlwind tour in their, especially early in their career, right? You're still early 30s when this stuff's happening and rise through the ranks relatively quickly. What triggers for Matt McDermott to be willing to go and leave behind, like, listen, you named off New York City, London, Hong Kong, Tokyo, Sydney. I mean, those are like, some of the most major cities in the country, and come back to South Jersey and work for yourself. What's the trigger that makes that happen?
Yeah, it wasn't really kind of a full circle event in my head. It was kind of like, what's the next step? What can I do in the United States that could elevate me here? And I just felt that, me being kind of the beholder of my own future, really my own development could be pretty much on my own. Like, let me just give it a shot. I took about 18 months. Really, I did it. It's about 18 months of really trying to figure it out. Tried the business consulting angle, tried went and did some work for a tax attorney, just tried different things. Let me try some things out because I know from my understanding and helping other companies through Deloitte, Merrill Lynch, BlackRock, really simplifying their operations, becoming more efficient, becoming more effective in how things are being done. I thought, well, maybe I can build my own little entity structure and, if not, help other companies with gaining efficiencies, build my own. So, almost by default, after 18 months, I said, buddy, you got to get working somewhere, So, I spent some time with a tax attorney. He kind of showed me the ropes on kind of how to advertise and kind of basically get the business moving. And I remember him at the time saying, I think he might have had, let's just say 200 clients or what have you. And he was just overstressed at how many that was. I said, well, I think it's more of a process issue for him than it was really a sales issue. It's kind of like, can I do 400 clients with the same amount of bandwidth as, someone else could do too? So I started working on those things and working on things to simplify. And fast forward, I'm up to over 1,200 clients now. And really with no advertising, yeah, and doing a lot of advisory work now. So I have some high net worth clients, small business clients that are on basically monthly subscriptions for strategic advisory and planning services. And that's what we do. We sit and we look at everything throughout how their business is accounting for what they're doing, and they can focus on growing their business, and I focus on reducing that tax for them through different strategies.
This opens up a lineup. By the way, I could just sit and talk about your story for the whole half hour, but my audience wants to hear a little bit about protecting some of their income. So I gotta go down this road a little bit. But the entrepreneurial journey always triggers me. This is why I do this podcast. I love it. And one of the things I notice about working with you is my life as your client is extremely simple, right?
Yeah.
Like your processes and your systems to make sure that my taxes get done correctly. I've never been audited, never even had a whiff of an audit. That all of that happens very seamlessly. What is it that you've done that you've implemented that you would recommend to other business owners like myself to look for if they're not coming to you as an accountant, which by the way, I recommend highly reach out. He's licensed all over the country. But if they're not coming to you, what should they look for as far as processes and systems for who's doing their taxes for them?
Yeah, yeah. So a lot of folks come in this with the idea, hey, I have a business. I want to pay zero tax. Everybody wants to do it, but you don't want to take the approach of paying zero tax by being, incorrect or misappropriating what you're doing and not being honest. So I always tell my clients, it's not necessarily about, hey, let's underreport. That's really not the focus here. The focus is not only do we want to save you money now so you can reinvest that money into your business, but also we're also looking ahead to exit strategies with our businesses, right? And the best exit strategy for a company is having a high net worth of that business. And if
Yeah.
you're spending the time underreporting or trying to push revenues into a different year, trying to move money around so that your numbers are low, one, it hurts you for financing. And two, it hurts you in that last valuation that you really need for your exit strategy. So I'm always pushing. No, we're showing it all. We're going to show it all, but we're going to take above board deductions and tax strategy elements into what we're doing that we can always add back if we ever need to go through financing, because the financiers all understand what is pure cash flow versus what's, tax books and records. So make sure those tax book and records are in a presentation so that we can pay as low tax as possible. And also what I do is I like to come up with what we call deferred comp strategies for our owners. So basically taking money and put it in different buckets so that we can take the deductions this year, but we're ultimately paying our owners just a little bit down the line. Could be through a cash balance plan, could be through solar 401k plans. We work with, bringing our kids into our businesses. How do we pay our kids? How do we push money through the kids so that maybe used by paying our kids that's funding their 529 plans and we're getting business deductions for. So what we work up here is basically 13 key strategies. And the strategies we implement are, we don't, not everybody's suited for all 13, but it's based on your net profits and we start there. So if your net profits are 50 grand, we have strategies for that. If your net profits are 200,000, we have strategies for that. And ultimately what we're doing is we're bringing that number down so that in our years, we're showing high value of our business, but low taxes.
I want to dive into this a little bit. Obviously, a lot of my viewers are people that are in the storage or small bay flex industry, people that are either acquiring assets or building ground up development assets. Give me some of the things that you're talking about specifically to people that are real estate investors, that are tax strategies that they can utilize to really help them protect their income where they can.
Sure. Well, your biggest friend in real estate is depreciation, right? It's a non-cash deduction, right? So if you can maximize on your depreciation deduction, that's knocking your tax number down. How do you do that? Well, there's some bonus depreciation elements out there. There's one called cost segregation. Cost segregation is a big element where ultimately you're going to bring in an engineer that's going to look at every little element within your real estate asset and come up with a depreciable base for that. So that basically takes what initially would be either a 27.5 year depreciation life or 39-year life. You bring these things down to maybe 5, 6, 7 years. So I like to get my clients into cost segregation, 1031 exchanges as you're going through and you're saying, okay, I'm going to have a $300,000 capital gain, let's say, on this asset if I sell it. Well, let's look at 1031 exchange where we can take those proceeds, put them into the next asset, and ultimately defer the taxes down the road. So when we look at strategies, and also my high net worth real estate clients always come to me and say, yeah, it's not so much about the purchase, it's about the exit. If I'm going to buy this asset, I have the money to buy, 100 different assets, but I want to buy the asset that when I go and sell it is going to show the lowest tax, but highest cash, let's say, gains from that. So we do 1031 exchanges, cost segregation. There's another element where this is great for married couples too. I love this one. So let's say you have one spouse makes 450,000 a year. The other spouse makes 150,000 a year, right? $600,000 a year. So you basically have the spouse that's making 150 paying the taxes for the one that's making 450. Right. So every time they get up and go to work, they're just burning money and it's going against the 450 spouse. Right. I look at it. So why are you working? Become a real estate professional, right? Which is a designation by the IRS, where ultimately you can take your what are currently maybe a rental property as a passive investment, turns you into what's called actively participating. So now you take advantage of so much more in deductions and losses, depreciation, and so forth, where you can go below zero. You take losses, and now that $150,000 you were making working at a company is now invested into real estate portfolio. And with depreciation and cost segregation and other elements we can put in there, we're showing tax losses on your side of the family, and that's offsetting your spouse's 450 grand. We implement this a lot. This opens up a lot of eyes for clients.
Love it. I'm going to tell people that are watching, don't be afraid to reach out to Matt and touch base with him if you want a deeper conversation about this, because there's so deep you can go down this rabbit hole. And I know one of the reasons I enjoy having you as my accountant is you have a really good understanding of it globally, where you can really help cater towards an individual person exactly what they need to make sure, as you said, right? You don't want to nobody pays to buy a business based on gross income, right? They pay to
Right.
buy a business based on net operating income, what the ultimate profits are left at the end of the day. So you don't want to overtake out what you're making, but on the flip side, you don't want to give Uncle Sam any more than he's entitled to as well. And I know you got a great handle on that. I want to flip a little bit and progress. Obviously, the big news on everyone's mind right now is AI. I
Yeah.
want to ask you, how's that impacting the accounting world? Are you seeing a tangible impact? How are you utilizing it within your business?
Mhm.
What's it doing to help your clients?
Yeah, so in my particular industry, so I'm very IRS focused with what I do. There are some limitations with AI right now. So AI would give me the opportunity, let's say that I could take a client's tax return. Let's say and it's not you're not allowed to do it yet, but the IRS does not permit this yet. But let's say, and I know AI is capable because I've seen how it's being sold out there on the internet. However, IRS does not permit this yet. But let's say I could take a client's tax return and put it into AI and say, hey, show me all the tax strategies that this client may be missing out on right now. It would spit it back in a few seconds and say, look,
Yeah.
you're missing this type of deduction, should consider this. AI has the ability to do that all right now, but it's open source. So we start putting personal information out there, that
Yeah.
gets everybody in trouble. So still at the moment where we're looking at strategies and we're looking at responding to IRS letters, could be resolution, what could it be? It still requires a human to be able to go out there and negotiate with the IRS. So we're not at that point yet. Where AI is really helping my firm and where I'm going, it's ultimately closing on the sales, right? So how many leads you have out there where you're like, oh yeah, I followed up twice, but I forgot, right? Or
Yeah.
yeah, I don't know, I don't have the time to go follow up on that lead right now. Well,
Yeah.
AI can do that for me now.
Yeah.
AI can integrate with my systems, whether it's through scheduling, whether it's through email, whether it's through my help desk, which is a an online automated basically workflow we have, and do some auto responses to my clients to chase down certain things, right? Certain documents I may want, rather than me go back on there 3 days later, flagging email. I don't know about your inbox, but my inbox is pretty. It's at the almost at the point of just overflow, or I have a staff out there just helping me chip away at what's in that inbox. But AI now is basically I'm kind of the biggest kind of sales preventer of my company because I can't go chasing down every lead that's out there. But AI is helping me do that. And I would totally recommend, and I don't know if this is off topic a little bit, but when you're in a growth process of your business, I think the biggest fear is labor, right? Am I going to go out and
100%.
hire somebody, right? Because now I'm taking on the admin tasks, the sales tasks, the advertising, what it is. But if you can get through that mental block of going out and hiring labor and just focus on the sales side of your business, you can find, and I've found it, my growth in the last 2 years has been about 22% year over year. I mean, and that's just through hiring. So
Yeah.
yeah, that's a big issue with people where they come out, "Oh, I can't afford to hire somebody. What if I can't pay them? What if I can't?"
Yeah.
If you can get past that barrier, man, I'm telling you, there's more opportunity for growth.
I want to dig in. You brought up the IRS, a lot of the work you do. And interestingly enough, like everyone knows April 15th, right? That's tax day, but it's really tax day for individuals. And a lot of your business is not individuals. A lot of your business is businesses. So April 15th isn't necessarily the due date. You're kind of busy throughout the whole year keeping track of what's going on. I want to go to a broader level. Obviously, we've had some interesting administrative changes in Washington each of the last, three presidential cycles,
Yeah.
going from Trump to Biden to Trump. How has that affected your interactions with the IRS? What's going on with the IRS? I know everyone was, especially business owners, scared during the Biden administration that the IRS was going to hire a bunch more auditors and everyone was going to get audited. What are you seeing in that interaction, and what do you kind of read the tea leaves as for the next couple of years as far as what's going on with the IRS?
Yeah, that's a great question. And I was
You can
very
give me praise for my questions anytime you want, Matt. I'll
that
take
was
it.
a great question because I've seen I saw an IRS pre-COVID that was very effective, efficient, responsive. COVID comes in, and now these folks are working from home. They're not responding. They're putting, you call, they say hold 5 to 7 minutes. They pick up, they talk for a second, hold 5 to 7 minutes. And each call was taking me about an hour and a half. And I'm on the practitioner priority hotline when I call the IRS. I can get through in about 3 to 4 minutes, right?
Yeah.
But still being on the phone with that person taking so long. And then you go into to Biden, where they said we're going to hire 87,000 IRS agents. Great, better service. I'm all about that because for me, it's about service with the IRS. If I can get a client's issues resolved in 20 minutes, that's great. If I got to be on the phone with an auditor or an
Yeah.
examiner for an hour and a half, that's not helping anybody because we're just
Yeah.
still just trying to get through something that can get them the answer in just a few minutes, effectively, right? So I saw where they were going through a hiring that never really materialized. Um, but it was a fear of a lot of people. I get it. I was kind of hopeful that was going to make my job a little easier. Then you get back into the Trump administration. Now they're saying, well, we're not going to take on all of these additional auditors, but we're going to invest into AI, right, into our systems and into how we notify the taxpayer. So I did see that. So I've seen a big uptick there from the automation of the IRS. So in other words, there's certain things that I can send to the IRS now that gets them a little faster. It gets processed more through AI or through whatever systems they're using to process with less manual intervention. However, I'm seeing a lot more letters that clients should be getting. So there's a lot more kind of false positives that are coming through, right?
Yeah.
And some clients, they see an IRS letter, they just want to pay it. And they want to say, oh, yeah, just want to get out, just pay it. But, what I'm finding is when 70, 80% of these are not accurate, you do want to
Yeah.
reach out to your tax professional, have them look at it. Say, hey, look at this. Does this look like it's a correct? Because I've seen a lot of inaccuracies in what they've been sending out. But I do believe probably in the next year or two, we're going to see a lot more of the IRS using AI as far as doing data mining, whatever they're going to do to look at a taxpayer's, deductions, see if they're in line with industry standards, see if there's anything that needs to be questioned. I've seen some examinations tick up. In other words, audits have been ticking up a little bit. But on the flip side of that, they're ticking up their audits, but they don't have the staffing to basically manage that uptick, right? Uh, Case in point, had an audit 2 weeks ago, and I'm on the phone for 45 minutes, calling. The auditor just quit. I guess days before the audit, I didn't know about it, right? No one notified me, so I sent a fax because you can't email the IRS, you got to fax them, and a letter saying what's going on. I'm still waiting for the status of that. So there's a lot of turnover still at the IRS. I think they have a lot of things to clean up over there. I'm hopeful that once they kind of figure this out, things will be corrected. I think if I could give them one recommendation, it's that, hey, we all have birthdays, we all have social security numbers. Let's use these to identify when your tax return is due. Why does it have to be due April 15th?
April 15th.
300
Yeah.
million people have to file the same day. Like it's just,
Yeah.
our country's not set up for that. It puts too much stress and pressure on the payroll companies, the employers, the tax preparers. If you can space it out over months, you can space it out. You do to file on your
Yeah.
birthday, something like that. And I know we can do it. I know we can get there. It's just a
Yeah.
matter of, pushing them a little bit. And hopefully, someone, at the top kind of sees it for what it is and sees that it's just not manageable to have everybody file their taxes on one day.
I've had so much fun talking the business side of this with you. I do want to get into a little bit of your personal journey because you've done a couple of things that in your life outside of being a tax accountant that I love. You spent many years coaching wrestling in your hometown. Talk to me about how do listen, you got 1,200 clients as a tax accountant, business owners, investors, people that are should I say needy sometimes, right? They want you on their beck and call.
Right.
What prompted that? What got you into it? And what was that like for you?
Yeah. So it was kind of it, it's kind of the clash of the private sector and the public sector, right? So you look at it and say, hey, I'm a business owner. I can build something, and I know from graduating from that high school in the '90s, we had a very powerful wrestling program. had since slipped away, and and I'm back in town again, back from my overseas duties, my New York City duties. I'm back in town. I went over and just volunteered. As I'm volunteering, I'm looking around. I'm thinking, wow, there's a lot of things here I could help get fixed, kind of getting this program kind of back on track. So, just volunteering my time, getting back in. Then next year I was a paid assistant. And then third year, wow, hey, would you be our head coach? Sure, why not put that on my plate? Let's do it. Let me get the right staff together and, make it work. So my first hire was one of the assistant coaches from when I was in high school. He hadn't stopped coaching. He's awesome. He's like the best free agent coach out there. I said, I
Love it.
called him up. He interviewed me for 2.5 hours before I let me hire him. Right. So we do it. I said, we can do this. I said, but I just need good people on my staff because, clearly I'm running a business as well. And I want to do it the right way. I want to do a kindergarten through 12th grade program. Everyone's going to have a common thread through what we do. We're going to have coaches up and down. We're going to do great things. And wouldn't you know it, like right out of the gate, everybody bought in and we did outstanding. I mean, we came out of the gate, first time in playoffs in 10 years. We had a winning record for the first time, and God knows how long that was. But then it kept growing, but with that comes, it's never enough for an entrepreneur, right? So, you hit these levels. Next year, you want to come and hit that level. Then you want to come back the next year, you want to go a little higher. And it just got to a point. It's at a point, it's like, hey, I kind of took a step back and saw myself more as a stopgap coach, kind of like the guy until you get the guy. And that's ultimately what ended up happening. You kind of hit this thing and say, there's only so much a private sector guy can do in a public school system. Let's go. Let's push it as far as we can push it. And then, let someone else take the reins. So that's where it's at now. So I'm out of coaching, completely focused on my family and my business and going that route.
Coaching business owners. He's Matt McDermott. I cannot recommend enough. If you're, not super happy with who's doing your taxes and helping you really understand your business, he's been a godsend in my life, somebody that I lean on heavily. I require far more of him than he requires of me. I'll say that. And he's taking care of me incredibly well. So again, couldn't recommend more highly that you reach out to him, have a conversation if that's something you're looking for in your life. Again, he works nationally, so it's not like you have to be in South Jersey to take advantage of South Jersey tax services. But as good of a human being as he is an accountant, which is why I really enjoy having him on my team. Matt, thank you so much for taking a half hour out of your time and coming and joining me. I want to give one more shout out before we go to our friends at Kiwi 2. Now, no longer Kiwi 2 Construction. They've changed their name to just Kiwi 2, which I love for Wayne Woolsey and his team. 30 plus years, thousands of steel buildings they put up in every market in the country. Reach out to them at kiwisteel.com. Get in early with them. The earlier you involve them in your project, the more that they can put their whole team to work, helping to save you money and make sure your project does what you want it to do, which ultimately, as we've been talking about on the show today, is have an exit where you make some money. He's Matt McDermott, world-class accountant. I'm Thaddeus Campbell. That's it for this week's episode of Stories Behind the Door podcast.